Hey, welcome back. It's JWalter here. In today's California housing market update, I have a lot of information to share with you guys. I'm going to be breaking this video down into two separate videos. So in today's video, I'm going to give you a high-level overview about what's really going on with our California housing market. In video 2, I'll share with you how each of the major counties and regions in California fared, because of course there's some pretty big differences. So in today's video, I'm going to break down a news release from the California Association of Realtors. They just posted this a few days ago at the time of this video for January home sales and also January home prices. So let's go ahead and dive right into the video. But before we get started too, if you're looking for a real estate agent referral from virtually anywhere in the US, then check out homeandmoney.com/Jason to get connected with a great real estate agent in your neck of woods. So with that said, let's begin today's video. So this is from the California Association of Realtors. They just posted this on the 16th of February. They say that California's housing market kicked off the new year with a bounce back in sales from December's 4-month low as housing demand remained strong. I'm going to be sharing a lot of graphics here towards the end of this video, so stay tuned for that. And also my breakdown about different trends that I'm personally seeing that you're not going to hear on this report here from CAR. In any case, home sales from January were up 3.4% on a monthly basis, but down 8.3% from 1 year ago. The year-over-year sales decline was a seventh straight decline, yet it was the smallest in the last 6 months. And according to the president of CAR, buyers returned from the holiday season to take advantage of the still favorable lending environment before interest rates climb further. To me, this makes a lot of sense because I think there's a lot of buyers out there looking to buy a house right now, while mortgage rates are still historically low, even though they have been increasing greatly. And I'm going to be sharing some stats with you here in just a little bit later in the video here. In any case, California home prices had a shift in the mix of sales towards less expensive houses, and also we have a seasonal slowdown as well. So home prices in California and also across the nation tend to peak in the summer months, and then they tend to plateau or go down in the winter months. So in my opinion, the spring market's going to be very telling about what's really going to happen with our housing market this year because interest rates have been spiking, and more on that here in just a little bit. In any case, they said that the statewide median price actually declined to $765,580. And January marked the first time since July of 2021 that the state did not record a double-digit gain in its median price. So have a look at this. This is actually a download that I pulled from the California Association of Realtors, and I kind of looked at some trends here. So here's what I'm personally seeing. So by the way, the median price of $765,000, that's for existing single-family detached houses only. The National Association of Realtors formulates their median price for all housing types. So for California, for whatever reason, they only look at single-family detached houses. But they do have a breakdown of condos here that I want to also share with you guys as well. In any case, January's median sold price was $965,000, and by my dumb math, that's 9.4% increase compared to January of 2021, when the median sold price was $700,000. By the way, our all-time record highs for home prices in California were set in last August when the median sold price reached $827,000. Ever since then, more or less, home prices have been declining, except for in December, we had a slight increase. But compared to 1 year ago, yeah, we're at $700,000, so a big increase of $65,000 basically in 1 year. And when looking at condo prices in California, in January, that was $600,000, so about $165,000 less than single-family detached houses. The all-time record high for condos was actually set in November 2021. Completely abnormal to have home price records or condo price records being broken in the winter month because, as you can see here, for single-family houses, home values in general tend to decrease in the winter months. Nonetheless, have a look at this because condo prices compared to 1 year ago increased 16% compared to 9.4% for single-family houses. So 1 year ago, condo prices were $515,000. At least the median sold price was $515,000. Now it's $600,000. So a big increase because, in my opinion, I think a lot of people are flocking to condos because more people are moving to more dense neighborhoods, whereas earlier on during this pandemic, a lot of people moved to less dense areas away from work because they can work from home. In addition to that, because home prices for single family houses are so elevated right now, I think a lot of people are moving to condos due to affordability issues. So going back to this report, CAR Vice President and Chief Economist Jordan Levine said January sales remained above pre-pandemic levels. However, a surge in interest rates in the past few weeks is concerning and will likely create affordability headwinds for buyers, which may result in housing demand being curtailed or decreased in the coming months. I agree with this statement here because mortgage rates have been increasing just over 1% compared to 1 year ago, but they have increased about 0.75% so far this year. And that's going to be causing affordability issues because as interest rates increase, the future housing payment for these home buyers is also increasing. Okay, changing gears slightly, let me share some graphics compliments of the California Association of Realtors about what's really going on with this housing market in January 2022. So existing home sales on a seasonally adjusted basis, on an annual basis, reached 444,000, but that's down 8.3%. In my opinion, this is due to a lack of housing inventory, and I'm more on that here in just a little bit. Home prices increased 9.4%. The unsold inventory index reached 1.8 months. In order to have a balanced real estate market, we need this number to be in the range of 4 to 6 months. So we have a long ways to go. We're actually down 10% compared to last year. And median days on the market is 12 days. That's actually a 9.1% increase compared to 1 year ago. This is going to be an important factor to take a look at in the months to come because if houses sit on the market longer, that could be an indication that home buyer demand is decreasing. But we're not just seeing that just yet. Although we have an increase of 9.1% compared to 1 year ago, still 12 days on the market is still very low. I'm going to be sharing that here in just a little bit, some stats with you guys. But anyways, median days on the market means that when a house gets listed for sale, when they accept an offer from a home buyer, that's days on the market. So 12 days on average in the US. So let's have a look at home sales in California. Here's the headline. It says sales rise from year end despite increase in rates. My key takeaway regarding this is that the average 30-year fixed rate mortgage in January, this is January 2022 housing stats, the average in January 2022 was 3.45%. Mortgage rates have been increasing greatly since then, though, because right now in February, we have interest rates of around 4%, so just over 4%. And then we've had elevated mortgage rates above 3.8% for much of February as well. So we'll have to see how sales and also housing demand in general may be impacted by these higher mortgage rates, especially if they continue to increase. But more recently, they've been decreasing, but more on that here in just a little bit. In any case, home sales have been increasing on a month-to-month basis by 3.4%, but we're down 8.3% compared to 1 year ago. Another thing I want to point out when you're looking at this graphic here is that in general, our seasonality of our housing market, we tend to have a low amount of inventory and sales in the winter months, and then it picks up in the spring and summer months. You can see that here. Let's look at 2014. We had a decrease of home sales in the winter months and then increases in the summer. It kind of goes up and down, up and down, up and down. I'll see in 2020, completely abnormal market when we had the onset of the pandemic right around this time. So right now, we should have a decrease of sales during this time of year, but in the next couple of months, we should have an increase of housing inventory, which could elevate home sales. We'll have to see. Here's something I also found to be very interesting because home sales on a regional basis in California, much of the home sales in California are in Southern California. So about 50% of all home sales in January were in Southern California, whereas the San Francisco Bay Area was 15%, and the Central Valley, which is where I'm located, is 23% of all sales. Whereas all the other major regions is a very small sliver of all the home sales in California. Something else I want to bring to your attention as well is here's January's home sales growth by region. So the San Francisco Bay Area had a decrease of home sales of 22% compared to 1 year ago, and also the Central Coast down by almost 21%. So all the major regions in California had a decrease of home sales compared to 1 year ago, except for the far north. They had an increase of 1.9%. Not a big increase, but definitely a big difference when you have a look at the Central Coast and the San Francisco Bay Area. Here's something I also want to bring to your attention as well. If you follow the channel, I always talk about how we have a big increase of luxury home sales ever since this pandemic started, or really since the summer after this pandemic started. But this is really the first time I saw a decrease of $1 million to $1.99 million houses. So these are home sales compared to 1 year ago by price range. So as you can see here, we have an increase of home sales by 3% in the range of 750 to 999,000, but in the range of $1 to $2 million, we have a decrease of 1%. We also had an increase of houses that sold over $2 million in California by 26%. But have a look at this. So when you look at houses that sold over $2 million, really in last spring, we had a big increase of luxury home sales of over 300%. Now that number has been drastically decreasing, but the number of $1 million to $2 million houses has been decreasing at lower levels than $2 million houses. So here's something I wanted to point out to you guys. So here's a share of $1 million home sales, and those actually declined to the lowest level in the last 11 months. So here, this red line here is the onset of COVID-19, basically. This is basically in more or less March and April of 2020. This blue line here represents the percent of sales that are below $500,000. So at the onset of the COVID-19, about 45% of all sales in California were for less than $500,000. That share has been decreasing greatly, but more or less in the past couple of months, that has been increasing. In stark contrast, for houses that sold over $1 million at the onset of this pandemic, that was around 15%, but that has been increasing greatly until we hit really May of 2021, and that has been decreasing. So now we have actually more houses in California that have sold in the range of 0 to 500,000 to $1 million and plus. So right now, about 30% represents $500,000 or less, and 25% represents houses that sold for over $1 million. And that's one reason why potentially the median sold price in California has been decreasing, because we're having less luxury home sales compared to the more affordable homes that sold. In regards to pending home sales, those have been declining by double digits for several months. Ever since really the summer months of 2021, pending home sales has been decreasing greatly. We're down about 16.5% compared to 1 year ago. And this is partially due to because we have a lack of houses for sale, and more on that here in just a little bit. Let's have a look at home prices in California. So California's median sold price declined to the lowest level since March of 2021, reaching $765,000, but that's down slightly from 1 month ago, but 9.4% increase compared to 1 year ago. Part of this is also due to the seasonality of our housing market. Of course, this is January we're talking about, where home sales tend to decrease, and you can see that on a historical level as well. So in 2013, we had low levels in the winter months and an increase and decrease. So it kind of goes up and down for home prices in California every single year, really, except for 2020, which was a completely abnormal year. But every year we tend to have a seasonality of our housing market where home prices tend to be at the lowest levels in the winter months. So again, we'll have to see what happens in the spring months, because home sales and home prices should increase if housing demand is still strong. In regards to price per square foot, that's reached $372 on average in California. That's a decrease of 2.6% compared to 1 month ago, but an increase of 12.4% compared to 1 year ago. And really ever since the spring months of 2021, look at how elevated price per square foot is compared to prior years. Way higher. I mean, look at 2019. Looks like it was around $250. Now we're at $372 for prices per square foot. Here's something I want to point out to you guys. I've been mentioning this on the channel very, very frequently, because home price gains have been increasing greatly, and that's causing mortgage payments to increase greatly as well, and that's causing an affordability issue. So compared to 1 year ago, the average 30-year fixed rate mortgage reached 2.74%. That was very close to all-time record lows. But in January of this year, it reached 3.45%. So a big increase in 1 year. However, mortgage rates are much higher than that right now. So have a look at this. So in January, the average was 3.45%, but mortgage rates have been increasing greatly. So starting out in February, rates reached 3.66%, and they have been increasing greatly more or less ever since then. So rates have been above really 3.8% ever since the 4th of February. So affordability is going to be even more of an issue if January's 30-year fixed rate mortgage on average was 3.45%. I would say February is going to be in the range of 3.8 to 3.9%. So a big increase in a very short period of time. In any case, because rates did increase in January compared to December, the average monthly mortgage payment growth actually increased by 19.7% compared to 1 year ago. And that's because home prices increased by 9.4% in that same time period. Okay, changing gears slightly, let me give you an update regarding housing inventory in California because we're at very, very low levels. So the month supply of housing inventory as of January 2022 was 1.8 months. Compared to 1 year ago, it was 2 months. And you can see this trend of the decrease of housing inventory really ever since 2019, before COVID hit. We have a decrease of housing inventory. You really can see this on this graphic here because in early January, we had about 4.5 months of housing inventory, which is very close to having a more or less a balanced housing market. By the way, this level here was fairly high in January because mortgage rates increased about 1%, up from 4% in the early parts of 2018 to almost 5% by the end of 2018. And that caused home buyer demand to decrease and houses sit in the market longer. And that's why we have month supply of around 4.5% in January 2019. But what happened after that? Mortgage rates decreased greatly, and that caused housing supply to decrease greatly as well. So the all-time low of housing supply actually was in December of 2020 when we had about 0.8 months of housing supply. That basically means at the current pace in December of 2020, all houses that were listed for sale at that time would be sold in 0.8 months, so less than 1 month. Now we're at 1.8 months. So bad news for home buyers right now is that this trend has been decreasing. So what we need to see is more listings to hit the market in order to cool off this housing market. And speaking of new listings, here's active listings. So this is basically another word for housing inventory. So I can see here in January 2022, very low levels, especially when compared to 2019 and 2018. I mean, really in 2018, we never reached levels below 40,000, and now we're at levels way below that. We're also not seeing a big increase of new listings as well. So new listings were 14,382 in January 2022. This means that homeowners listed their houses by 14,382 in January of 2022. So a total number of houses that got listed for sale in January was just over 14,000. Compared to 1 year ago, it was 16,000. And in 2019, it was just under 20,000. In 2018, it was just over 22,000. So this is another reason why housing supply is so low, because we're not having enough new listings that are hitting the market. Okay, changing gears slightly, let's talk about market competitiveness. So time in the market remains below pre-pandemic levels as a headline here. Days on the market, as I mentioned before, is 12 days. Compared to 1 year ago, it's 11 days. As you can see here, this trend has been increasing, but compared to prior years, especially in 2019, 2018, and really any month back to 2010, we're at still very, very low levels. And that just goes to show how home buyer demand still remains very strong, but I'll definitely keep you posted with new developments regarding that. In regards to the sale price to list price ratio, that reached 101.2. That basically means that home sellers on average in California for January sold their houses for 1.2% above their asking price. That's an increase of 1% compared to 1 year ago. And ever since really 2021, we've had levels above 100%, whereas before 2021, we really never surpassed 100%. So back in January 2008, for example, the ratio was 92%. That basically means that home sellers were selling their houses for 8% less than their asking price. In addition, the share of houses that sold above their asking price went down to 57.3%. The all-time high was in the spring months of 2021, when approximately 71% of the home sellers were selling their houses for over their asking price. However, this was the third consecutive decrease of the share of houses that sold above their asking price. So I have to keep a watchful eye regarding this, because if this continues to decrease, that could imply that home buyer demand is decreasing, but we will have to see. But I want to point out, of course, compared to prior years, 57% is still very, very high. We look at 2019 through 2017, we didn't have any month that was actually above 40%. So compared to pre-COVID, we're still at very elevated levels. We'll have to see if this trend continues or if it picks up. I'll definitely keep you posted regarding that. So what are you seeing in your neck of the woods? Every housing market is different, so comment below with what you're seeing in your neck of the woods. Also, check out that link below if you want our agent referral from virtually anywhere in the US. Check out that link below. Also, if you got any value out of this video, please hit the like button. I greatly appreciate it. And also stay tuned for video 2. I'll post that here in a couple of days. Hope you have an awesome day. I look forward to seeing you on the next video.